We have an amazing episode for you today. We're going to get into Hedera's presence at Davos and their involvement in the semi-quincentennial. We also have a great shark bites for you. There's a new use case that we just got a teaser on yesterday that involves two of the Hedera council members. And the HBAR could potentially, because of some legislation that's moving through, could get a special designation that puts it up there with Ethereum and Bitcoin. Welcome back. I'm Brandon, the HBAR Bull, here once again to bring you the latest in the Hedera ecosystem. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So the first thing we're going to dive into is Hedera and its presence at Davos. For the past few years, Hedera has put on a really good show at the World Economic Forum conference, and this year is no exception. Hedera is a co-sponsor in the official U.S. venue, the USA House, alongside McKinsey, Microsoft, Ripple, Qualcomm, and MasterCard, as well as many others. The event will be taking place next week, and I'll be sure to get as many details and breadcrumbs as I can for the next show. I do know that Carlos, the CEO of CLSQ, will be there, and with the launch of their Kite token coming up, there could be some related announcements around that. And what I love about the USA House is it once again gets Hedera alongside these huge corporations. Now, these corporations are enormous, right? They have many different divisions. And even though we might have some touch points with these entities already, this might give us an opportunity to make some more of those connections and potentially create a new champion for Hedera. Just spark that little bit of interest, that little bit of curiosity around what Hedera is capable of, and potentially push Hedera's interest within these organizations. So I love to see what we're seeing there. And of course, this is the USA House, and there's another huge thing happening this year when it comes to the United States, and Hedera is getting involved. Hedera is partnering with America 250, the national nonpartisan organization charged by Congress to lead the commemoration of the signing of the Declaration of Independence. Hedera will support the semi-quincentennial through storytelling, community engagement, and technologically driven experiences that will help make these celebrations accessible to all Americans. Hedera founder Mance Harmon said, "As U.S. Air Force veterans and technologists, Dr. Lehman Baird and I founded Hedera after seeing a gap in the market. Hedera helps make digital interactions secure, transparent, and verifiable. With the country nearing its 250th anniversary, we're excited to work with America 250 to help more people take part in the celebration." So know that U.S. tokens were so 2024, but I think we could see a resurgence. There's going to be an awful lot of focus in the United States this year, and having that American First tag certainly could help out Hedera. So I like this angle of both the USA House and participating in America 250 as well. So the next thing we're going to dive into is there was a teaser that was put out by Genfinity on an interview that they're doing with Tata Communications that they're going to put out on Monday. Now, this use case is also involving another one of the Hedera council members, Zane. So let's take a quick look at that clip, and then we'll come back to talk about it.
Can you talk about some of the work that Tata Communications has done as far as proof of concepts thus far with these suppliers? Where does that overlap with Hedera?
So, as I said, we work closely with the Hashgraph team. So we started by picking the billing problem, and then we have expanded that to a larger problem, which I will talk about. But essentially, we have done a couple of, I would say, not just proof of concept. For billing, we've actually successfully implemented a system where Hedera brought the power of their underlying layer 1 and layer 2 DLT and services, and we complemented by building a layer 3 application on top that enables billing to happen, right? So this system is implemented, it's live. We have 100% adoption of our suppliers. Close to about 1,300 suppliers are now using this system, right? And we are settling our billing 100% on this platform. So it's no more a POC, it's a live platform, right? And our intent is now to expand that concept and say, now, can we extend that to become a global roaming marketplace where any operator can come and they can contract, they can settle, they can essentially manage an entire life cycle, right, on the platform. So that's something we worked on an initial POC with the Hashgraph Association, and we are testing this between Zane, who's another council member, and ourselves. So the idea is to drive initial testing and adoption of this platform and then take it to the wider market globally.
So we've heard about this roaming settlement as a perfect use case for Hedera for years. And here we have it actually coming to fruition with one of the Hedera council members. This is absolutely massive. I'm really happy to see this. Now, I do want to clarify a few things. The platform is built, so it's past the proof of concept phase. They already went through their pilots and all that kind of stuff. They have all of their suppliers signed up for it, but it is not completely live yet. We'll say they aren't using it at scale yet, and that's going to be the next step. So the reason why we aren't seeing a lot of transactions on the Hedera network is because of that. So we're going towards the scaling. The next thing is you heard them talking about the layer 2 and layer 3. Now that is a little bit of nomenclature issue. So the layer 2s that he's talking about is actually the Hedera services. So we're talking about the token service, we're talking about the consensus service, or the smart contract service. And the layer 3 is an app net that they've built on top of that. Now, I'm not sure if that's a hash sphere or something along those lines, but that is what is encompassing this platform. The next question is, what are they using for payment? It could be the rupee, a digital rupee, but I think it's probably, since they're talking about expanding this worldwide, it's probably the US dollar, and the main infrastructure built around a US dollar stablecoin for Hedera is on USDC. So this could have a really big impact on USDC if we have not just Tata, Zane, and those players participating in this and supporting our USDC market, but an additional 1,300 suppliers. Now, I think that Rob is probably going to have a big part in this in his Hedera Enterprise Adoption team. He's the director of that team, and we're probably going to get some more information around that. Now, we did have a Shark Bites this week, but this information came out from Genfinity after that, so we're going to have to reach out to Rob at a later Shark Bites to get some more information. Speaking of Shark Bites, we can jump into the one that we have this week. We got some great questions from the community, and Rob did, as always, a great job addressing them. Hey, Rob, welcome back, buddy. How is the new year treating you?
It feels like we're deep into the new year already, and we're only like 2 weeks in. So I think that bodes well for a pretty good year. Lots and lots of plans over the next 2 or 3 months. So yeah, I'm pretty pumped about all the potential for 2026.
Well, if you feel like that, that means you're working hard and getting a lot done. So that's exactly what we want to hear. We're going to jump right into the questions now, though. The first one we're going to go to comes from Jerry. He's a longtime community member, has been grinding in the space for a really long time. We talked to him a lot behind the scenes, and he asks, generally speaking, are the representatives that attend the Hedera Council meetings high-level managers with actual authority to implement pilot programs? If not, what does the typical approval process look like? And is this a conversation in the original negotiations?
It's not necessarily part of the negotiations on joining. By the way, Jerry is a complete OG in this space, so we're very lucky to have people like that in the ecosystem. So, shout out to Jerry, who I met at HederaCon last year for the first time, and he continues to be a stalwart supporter of Hedera. So, kudos to him. And thanks for the question. The council member representatives, we have a variety of people on the council, which is great because it adds to the real diversity and kind of which leads to decentralization, right? So we have lots of different viewpoints from lots of different experienced people from a wide range of cultures and sectors and businesses. So I think the fact that we've got a diversity within the council member reps actually is hugely contributory to the strength of the governing council. It is fair to say they're not all C-suite, right? So if you've got a company the size of Dell or Standard Bank or Google Cloud, you would not expect there to be a C-suite representative sat on the governing council. What we do hope to see is that we have suitably high seniority within those representatives, that for at least part of that business, they can represent the council member. They have authority to make decisions because, of course, from a governance perspective, there are lots of decisions being made by the governing council, by the Hedera Council. And in order to vote and sign for those votes, and those transactions are actually on ledger. So there's an actual process for voting, which and needs them to have that authority in order to make those to sign those transactions. Then that is the level at which we expect them to be. There are some great exceptions to that. We do have CEOs like Frank Mwiti at Nairobi Securities Exchange. We have people who are huge movers and shapers within the businesses, like Frank Wang at BitGo. Many of our representatives are maybe only 1 or 2 kind of degrees away from the C-suite, and therefore have lines into those C-suites. So, we've got a wide variety of representatives. When they now come on to the council, they come with 1 or more use cases. And I guess the process that has got them to that point has ensured that they do engage internally with stakeholders, with budget holders, with executive sponsors in order to support that use case, because the due diligence that the membership committee does on that application requires that to happen. So I guess that all of those things come together. From a heat perspective, we have, as part of the range of services we're setting up, we created a client advisory board as well. And that CAB will enable us to actually support both the council member representatives, but their internal engagement with senior stakeholders within their organizations as well. So, we provide that kind of ability for them to not be the lone Hedera advocate, which they all are, but also to be engaged, both on basis of education, bilateral education, actually, but also strategic alignment and all the other things that need to be done in order to achieve these big lighthouse use cases that we're seeking to deliver in the very near future. So yeah, great question from Jerry, and we have some amazing council member reps. We've just gone through another round, as we do annually, of the committee elections. And we've got a new flush of council member representatives who have put themselves up for to be on the committees. So that's great to see as well. Getting fresh blood, getting new engagement, and getting new perspectives into those. The committees that are the organs of the council and the kind of the key operations of the council, and recommendations that go into the council for voting. So it's all working very, very well.
Well, this next one dovetails pretty well into it. It comes from Kevin, who asks, what's the earliest realistic time frame when we should expect to see meaningful, irreversible movement from pilots into live ecosystem workflows on Hedera? And what specific evidence should the community look for this year to validate that transition?
So, great question. Question that I'm asking myself a lot. I guess this question is very specific to the heat projects that I'm supporting. We've got a number. I keep saying up to a dozen. I think it's a strong dozen, at least from the outset, that we're supporting and tracking. We're trying to bring those into manageable chunks so that we will deliver within a 12-month time frame. I'm looking at a 6 to 9 month time frame to get to an MVP in production state. The nature of that's kind of segmentation of delivery means that we may get kind of core infrastructure in place. We may not be at that kind of scaling stage at that first point. It may well be that we can, but enterprise delivery tends to be deliver proof of concept, deliver limited pilot into production with friends and family, or just a limited number of users. Test heavily, iterate. Get that MVP into the hands of more users and scale from there. So in terms of delivery into production and then scale, there'll be a lag between those two. But given that we've got so many kind of on the rails and tracks, I think they'll all be scaling at similar times. What to look for? Well, my hope, and this isn't always the case, but my hope is that there will be lots of publicity about the deliveries. So certainly it won't be done kind of under the covers, although commercial sensitivity always applies in the case of these big corporates. So it may well be that there's a kind of a more stealthy release. But once it's kind of public and it's announceable and it's starting to scale, it will be obvious for everyone to see. And although some of these use cases won't be massive scale ones, there might be fairly small volume use cases. Some of them will be large volume use cases, and it'll take time to scale that as well. But the mix of those use cases should contribute to significant uptick across the board on all the transaction types that we look at.
Now, we do have a second segment of Shark Bites where we address some more of your questions. One of those questions, actually a few of those questions, are around Hedera's competitive and collaborative stance with the Canton Network. So don't miss that. Stick around for it. But in the meantime, I have a few other news things that I want to get into. The first one comes on the legislative and regulatory front. There was a new discussion draft put out by the Senate Banking Committee for the Market Structure Bill, or the Clarity Act, that included a section stating a network token shall not be considered an ancillary asset and, for the avoidance of doubt, shall not be considered a security under any provision of law described in the Securities Act of 1933 as added by this act if, on January 1st, 2026, any units of that network token were the principal asset of an exchange-traded product, the shares of which are listed and traded on a national securities exchange registered under Section 6 of the Securities Exchange Act. Since HBAR already does have an ETF that fits those requirements, along with XRP, Solana, Doge, and Link, under the language of this draft, HBAR will be given an exempt status similar to ETH or Bitcoin, essentially codifying its status as a non-security, making it much easier to add to other financial products like basketed crypto ETFs, and giving it a generally clear runway for anything you might want to do with it within TradFi. Now, that's not to say that other assets would be completely out of luck. They would just need some additional filings, which I don't think would be an issue under this administration, but administrations change. Said another way, HBAR is getting grandfathered in if this legislation passes, and goes to show how important it was to be an early mover on the ETF front. Now, there's been all kinds of controversy around this draft, and one of the main things that came out is Coinbase came out publicly and said that they don't support this draft as written. The main reason is because there's language in it that restricts yield being paid to stablecoin holders. It's pretty clear that the banks have had a hand in this, and frankly, I'm not surprised. I don't think this is something we should be pushing too hard. Most of the money that's created in the United States, not that I agree with it, but is done through the banks. This is just how our monetary system works. And from what I've heard, because you only get 0.1% holding your money in your bank account, and you might get 2, 3, 4% as far as holding stable coins if they allow rewards to be paid, because all the stablecoin issuers are doing is putting those in T-bills, and those T-bills pay 2, 3, 4%. So they could just pass those rewards on to the stablecoin holders. So the estimates are that that dynamic could pull $1.5 trillion out of the banking system. That breaks all kinds of stuff. Now, I'm not saying it wouldn't be cool, but I think the damage it could potentially do to the economy in the short term, if it's not done perfectly right, could be a major issue. So I wouldn't make that a die on the hill kind of issue, but time will tell. I will say, going back to the ETF thing, it is huge. You can see how the benefits are rolling out from that early issuance of the ETF. And a lot of the credit for that has to go to Greg Bell, formerly of the Hedera Foundation, and of course, Canary Capital, the issuer of the HBAR ETF. I do want to say that we saw some more inflows into the HBAR ETF, which now holds 492 million HBAR, getting close to that 1% total supply milestone of 500 million HBAR. I think last week we reported that we were at 278 million HBAR, so we've seen a significant increase just in that past 7 days. Now, moving on, and I know I'm hitting you rapid fire here. There is just so much going on in the Hedera space that I don't want to miss. But the next thing was a report that came out of the largest bank in the United States, JP Morgan. It was entitled Tokenization of Money Market Funds. The reason there was so much attention on this is because they had a section discussing public, private, and public permission networks, and they chose Hedera to explain the latter. Now, I'm not surprised that they used Hedera as an example with all of the work that Archax has done with funds from BlackRock, Fidelity, and Aberdeen. We are certainly leading in this space, and Archax has been making them useful as well. But regardless, it's good to see that HBAR is on the big banks' radar. Now we're going to shift gears a little bit into the Hedera Ascension Hackathon, which had their closing ceremonies this week. There were 5 tracks in total: AI and agents, DeFi and tokenization, sustainability, IoT and DePIN, and an open track. All of the winners were great, but there was one that stood out to me. It was in the sustainability track, and I think it caught my eye because it incorporated elements of payments, DePIN, and of course, sustainability. So let's give an opportunity to the sustainability track winner, ChargeFrog, to explain what they built.
The backstory of why our team built ChargeFrog is that first, our team found out that Europe's rapid EV adoption is somehow outpacing the charging infrastructure that currently available at the region. And also that the current EV charging infra is quite unevenly distributed. It's one of the things that we included into our core design of the end model. But we think that the friction is still on the high cost and barrier to start investing. And also the most important question we are trying to solve is the carbon market credibility kind of crisis. So this is the reason our team built ChargeFrog. So ChargeFrog, we structured it and designed it into something like a community-led carbon negative EV charging network on Hedera. What we did is that we let all the stations, they are all fractionalized into ERC 1400 and ERC 3643, which is a very common tokenization standard. We make it DYOR standard and compliance with the Reg S digital securities regulations. So we somehow unlocking a compliant micro investment and a pro rate revenue sharing to everyone, which comes out to the community-led model. So how it works in the simplest state is that the network users will pay on-chain credits for a transparent charging economy, while investor will decide on how the network scales. So for example, investor able to decide which location will be the next one to plant a ChargeFrog EV station. So, and we also have the core, which is the Guardian-powered digital MRV system. So, which automatically mints and retires carbon from NFTs. So you can somehow understand it as a carbon offset thing, but able to verify it on chain and eliminate something called greenwashing. So everything that we design, all the features, we pack it into a super app because UX is the most important thing we think. So we unify all of the action into a very seamless experience that can access on mobile. So enable everyone to interact directly with our custom engineered stations that you can see in our demo video. We have a pilot station that is actually working and able to charge, interact with actions on the Hedera network throughout Europe. So this is all about our project, ChargeFrog.
Sticking with the happenings in the developer space, there's going to be a Hedera Dev Day on February 17th in Denver. There's going to be speakers all the way up to Lehman Baird himself and what looks like the entire Hashgraph DevRel team. So that event is going to be taking place alongside ETH Denver. So if any of you developers are going to be attending ETH Denver, this is certainly something you should check out as well. So the next thing we're going to dive into is an interview with a team that has been working really hard in the Hedera space for a really long time. And it looks like they're starting to get a lot more customers. So let's check it out. So today we have the Mingo crew back. We have Joe and Jason, and of course Mingo is the ticketing solution on Hedera. We also have Amale, who is the governor of the African Boxing League, to tell us a little bit about what they're doing with Mingo. Gentlemen, welcome.
Thank you so much for having us again, Brandon. Really appreciate this. Thank you.
Well, it's certainly my pleasure, Joe. It's always great to have you back. It sounds like you guys are doing some really big things. But to start off here, Joe, can you just explain this latest partnership?
Okay. We, in the background, as most of you know, have been working on building an extensive ticketing platform on Hedera, securing tickets on chain, anti-fraud, lower fees, all those wonderful things we talked about before. And as part of that, we were invited to present our ticketing solution to the World Boxing Council. And when there, we met this lovely gentleman, Omale, and his team. And he has some amazing things happening in the continent of Africa and in Nigeria itself with his own league, Yucateka. And so we stayed in contact with him over the last year as we've built out our platform. And then he came back to us in December and said, look, I'm ready now. If your ticketing is ready, we'd love to onboard Mingo and use Mingo for ticketing. And so we're thrilled to bits to be working with Omale and his team across 54 countries on the African continent. So, Omale, thank you so much for your belief in our project, and delighted to be working with you.
Well, I'm going to go to Mr. Omale next. Can you explain a bit about your league and why you chose Mingo?
Oh, thank you very much. There couldn't be any other partner in terms of the crypto world and ticketing solution other or better than Mingo at this strategic point of our drastic revolution, boxing revolution in Africa. The fee, the security, the network, their consistency, data protection, and a wonderful, wonderful dedication of that Mingo platform in that sector of boxing is actually one of the major reasons why we have to partner with Mingo when I met Joe Arthur. A little about the league, the boxing league, Africa is actually at that point in time now where we have decided to change the narrative for boxing revolution in Africa. In the past 10 decades of participation of African continent in the Olympic, Africa has recorded only 45 medals in 100 years. And in the last Olympic, just 2 medals to the entire continent, one from Algeria and the other one from Cape Verde. And we're talking about a country of 54 countries in this given continent. And that is why few of us, the enthusiasts, that actually believe in the market share, the value, the strength, the steadfastness of the African continent, as far as boxing is concerned. We came up holistically under the African boxing, the only governing authority, continental body to regulate Olympic-style boxing in Africa, which I happen to be the vice president. In the good wisdom of the president, Dr. Solomon Kagbo from Sierra Leone, we came up with the holistic package, the African Boxing League, which is going to proffer solution to enhancing the development of boxing in the entire continent of Africa by creating a consistent platform where each and every the federations in Africa will be able to use that platform to develop their athletes on a consistent basis, actually every given week, from one country to the other, having tons of events within the umbrella of the boxing league for the next 5 months. So you're going to see boxing across all the weight categories of world boxing, happening in every given country. Maybe this given weekend, you're going to be having 2 countries fighting each other in all weight categories. Maybe sometimes in Cape Town. The next week, they're going to be probably in Casablanca. The next one, you're going to see them in Malabo, across the entire continent, towards preparing for the upcoming Olympic. We are trying as a continent to develop all the boxing tables across board. And while having all those given events, the best way for actually to showcase and the fan base and making sure everybody is following it up, the issue of security is very, very paramount to us to make sure we want a ticketing solution whereby it is seamless, it is easy, it is free, and the interest of all the teaming fans who are following up, who are watching the game, handling the event is secure. And that is why we reach out to Mingo. And we believe with the partnership is going to position Africa and prepare us better for the upcoming Olympic in Los Angeles.
Well, that's fantastic. It sounds like Mingo is a perfect fit for what you're doing, and I'm excited to see how it's going to work at scale. So, Jason, I want to go to you next. How has the app been functioning to this point, and do you have any updates?
So look, in relation to the latest updates with regards to the app, it's all been centered around ticketing. Our focus for the last 3 months has all been around getting the ticketing platform live, getting all of the features implemented. And obviously it's a PWA, so it's cross-device compatible. The beautiful thing about the platform, I suppose, which is different from some of the other products that we've been building, is we've abstracted the Web3 elements completely. Again, because the focus for the ticketing platform is not necessarily a Web3 native audience. It's traditionally going to be a Web2 orientated audience that aren't necessarily looking to engage in the Web3 elements. They're not necessarily looking to, deal with all of that stuff yet, deal with private keys and, self-custody and everything like that. So the ticketing platform is entirely kind of Web2 driven with all of the Web3 elements hidden in the back. So that's been the main push. Now that we, I suppose, have a bit of breathing space, now that is live and everything is operational and functional, we will be kind of shifting our attention back to the wallet. It's not so much that there's a lot of work that needs to be done, but there's just kind of like small little improvements that we want to make in relation to kind of the user flow and the UI UX. And then long term, or I suppose kind of the vision for Q1 is to get the marketplace operational. So this would be the secondary marketplace for all of our tickets. So we see the secondary ticketing platform as being hugely influential in what we're doing. Obviously, that will provide a lot of the functionalities that we want to bring to the market around, allowing more control over resale and providing a safe place for our users to both sell and buy tickets on the secondary market. So that's going to be the biggest push, I think, for 2026. It's going to be, or the first Q1 of 2026 is going to be getting that platform live and continuing to roll out the functionality around ticketing.
All right, Jason. Well, it sounds like you have some exciting times. Joe, what can we expect from Mingo in the rest of 2026?
Brandon, that's a great question. As Jason outlined, from a tech point of view, we have all of those things lined up and planned for 2026. But from, I suppose, business development point of view, our goal is to continue working with promoters like Omale and his team. We have other things lined up at the World Boxing Council, Muay Thai, and WBC Asia. So some really exciting things happening with them. And I might come back to you in the next couple of days there with some information from that as well, Brandon. But I suppose the key here, we have already got a huge community out there of people who are interested in Mingo and interested in Hedera. We're putting this out there to them. If you help bring us events, the first thing is every single ticket sold on our platform is 7 transactions on Hedera. So the more events that we run, the more beneficial it is both to Mingo and to the Hedera ecosystem. And with Omale and his team, we're talking about significant numbers of new wallets as a result of a year's working with these guys all across the continent of Africa. Well, if you can help us bring more events to the table, we will take a share of our actual ticket price that we charge, and we will share it back to the person who brings us the events permanently. Not just a once-off, but every time that event organizer sets up tickets and runs another event and another event, well, you'll get your cut of the revenue from the ticket sale. So we'd like to call out there to everyone, whatever the event is, it doesn't have to be boxing. It can be music, it can be a charity event, it can be whatever small, big, we're open to having discussions and to sharing revenue with the community. So that's what I'd like to put out there, Brandon, for the new year.
Well, that's music to my ears. I'll say, all you HBARbarians out there, if you are involved with any kind of entertainment, music, sports, all that kind of stuff, this is a perfect opportunity for you to be able to participate in some of Mingo's success. But as always, Jason, Joe, thank you so much for hopping on. And Omale, thanks for using Mingo.
Thank you so much for having us, Brandon.
For the next few topics, we're going to stick with that consumer-facing stuff. We're going to start off with a game that's being built on Hedera. We have legends of the past who have been doing some public testing, and we have a clip of their team participating.
Or you kill the villain guy.
As you gotta get this one. It's the last.
Oh my god! Let's go above 700.
Okay, maybe we have another 100. 745.
745. Okay. So does that knocks Baz out of the top 5?
Oh, Baz.
Yeah.
Unfortunately, we have another game that's built on Hedera that might be reaching the end of its rope, and that's through no fault of their own. Due to the terms and conditions on X, the barking game is sunsetting on the platform. Now, I really did enjoy participating in the barking game, and I was talking about it just a couple weeks ago. I would suggest they continue over on Galaxy. Why have a Hedera native Web3 social media platform if we're not going to do crypto stuff on it, right? On the brighter side, there's been some bugs that have been fixed on the Karate Combat app. Due to some Blade Wallet support issues, I was getting some reports and experiencing this myself that I couldn't send crypto out of the wallet, including their native token Karate. Well, it looks like those problems have been fixed and I was able to use it no problem. Now, as we've reported in the past two Karate Combat events, you couldn't participate in up-only gaming, and I think it all swirls around this shift from them working with partners for maintenance of their app to doing all this stuff in-house. And it looks like they are correcting these issues, and I have been guaranteed that for the next event in February, the up-only gaming is going to be up and running. So I'm looking forward to that. Of course, the token has struggled in the market. I've been wrong on that one, but I haven't sold any of my Karate. I'm still looking forward to hopefully a Phoenix story to come out of this, but time will tell. There's certainly no guarantees. Now we're going to shift gears again. We are going to go back to the regulatory front because there is an entire team that's focused on policy around the globe when it comes to Hedera, and it's led by Nilmini Rubin, who put out a video this week explaining some of the stuff. So let's check it out.
So we're in a really exciting moment for global policy because jurisdictions are developing the rules right now that impact digital assets and digital ledger technologies. The U.S. is moved legislation through the House, and it's developing legislation in the Senate that we hope will pass soon that creates a market structure for digital assets. But already, they've recently passed the Genius Act that provides a legislative framework for stablecoins. So it's a huge amount of progress. What we've seen is the passage of the Genius Act in the United States has brought a ton of interests into digital ledger technology and crypto from groups that previously were interested in Web3 and emerging technologies, but also people who are in traditional industries. The passage of legislation is catalyzing investment and interest in our technology. The number one thing that policymakers are interested in when we talk about Hedera is our governance structure. So we're governed by a group of companies and organizations that are global and that range across industries. And they are really kind of captivated by the transparency and the organization that goes around our governance. It shows the interest in being compliant and the longevity of the network because it is governed so well. So policymakers are very interested in governance. They're also interested in our technology. When we start talking about the hashgraph technology and how fast and reliable it is and the speed to finality, that is of a lot of interest, especially policymakers in the financial services areas. So our policy team works a lot in education, which is really, really fun because we get to talk to people about the innovations being built on Hedera and how it may impact the world so that they can think about what rules they want to put in place to protect consumers and to facilitate economic growth. So what we have done is work with think tanks like CSIS on products like on reports on financial inclusion or research into how blockchain supports democracy. We also work with think tanks like the Atlantic Council. We're members of the Economic Center with Milken and with trade associations like the Institute for International Finance. And then we also reach out directly to policymakers to talk to them about what's happening in the industry. We really enjoy it because it helps us, share all of the great work that people are doing as they innovate. And it's also helpful for us to learn about what policymakers are concerned about so we can make sure to integrate it into our work. I expect in the next few years that we will have a real body of regulation on digital assets. Hopefully, it will be interoperable. In 3 years, I hope that we will see what the best practices are in policy. We'll have rules promulgated in different jurisdictions, and we'll be able to see which ones work best. And we'll have the opportunity to hopefully harmonize across jurisdictions.
Next up, we have a team that continues to exceed my expectations and execute on a level that I'm really impressed with. Hashgraph Online announced their registry broker now indexes Virtual's ACP agents, making it easy to search the ecosystem by graduation status, offerings, real performance signals, success rate, online status, and volume or revenue all in one place. Virtuals is a next-generation on-chain ecosystem for autonomous AI agents, digital beings that can think, act, transact, and interact without constant human supervision. This is why Virtuals calls it a society of AI agents. These agents aren't just tools, they're economic actors in their own right. And every Virtuals agent now comes with a trust score powered by Hashgraph Online's trust algorithm. This all means easier agent discovery, clear objective trust, and safer agent-to-agent and human-to-agent interactions. The agent economy needs rails, and they're being built here on Hedera. All right, and now let's jump into that second segment of Shark Bites. The next one comes from Gerald, who says, since more and more of the potential future value of the Hedera ecosystem is being concentrated in Hashgraph, do you think there will ever be an opportunity for community investors to invest in Hashgraph? Now, Rob, you can correct me if I'm wrong, but I believe that Hashgraph is a fully owned subsidiary of Swirlds Labs, which is a private company. So I know that there are investors in that private company, but for it to be really available to the community until they move to being a public company, so public stocks trading on the stock market, it would be kind of hard to invest in something like that. First of all, is that correct before I bring up my next point?
The correction is that it's not Swirlds Labs. Swirlds Labs is the former name of Hashgraph. It's Swirlds Inc. So Swirlds Inc. is the Hedera Council permanent member. It's the business that the founders set up and took the initial investment. And Hashgraph is that. I don't know what the capital structure of Hashgraph is actually. I suspect they've taken in investment, private investment into that. But for community members to buy shares or stocks in Hashgraph, it would have to be listed, and that's I have no insight into whether that is ever going to be the case.
I will still say, and I'm not sure if you can talk about this, but I still think that to participate in the Hedera ecosystem, HBAR is probably still the best way to go. 10% of the fees are going to go into account 800, which goes directly to token holders for staking. And I think if you do want to participate in the success of the Hedera network, that is going to be the best way to do it, particularly as a retail investor. But I do think that Hashgraph does have a path to being a viable, great company. That said, it's dependent also on Hedera, and the easiest way, like I mentioned, to participate in that upside would be HBAR itself.
For sure. I mean, Hashgraph, from what I've seen in the last few months since joining it, is a very strong technology company. Obviously, with a very focused technology stack, but not only is it the custodian and core engineering team for the Hedera and the Hedera network and the Hyro technology stack, but also from a sustainability perspective, it's going to have to build out more commercial products and capability, which it is doing already, with HashSphere and building out of the studios and everything else that Mance and Eric have spoken about recently. So that's the model for Hashgraph. You're absolutely right. Hashgraph's success is Hedera's success. And so from a Hedera Council perspective, we as Hashgraph need to deliver to the Council's expectations. And the longevity and sustainability of the project, the 100-year business, ties the two together. But they're obviously separate organizations. And anyone in the world can actually get access to that success through, buying HBAR and building on the network, building and participating and creating new utility. That's the positive feedback loop that everyone that participates needs to understand. And it's so easy now to get involved. Everybody on this planet has got access to AI. They've got access to vibe coding. The vibe coding using AI tools for Hedera is super, super easy. I would encourage everyone to do it because, everyone's great ideas can be converted into a business idea, which can be converted into technology very quickly, and that flywheel is going to drive all the utility, which then creates the positive effect we want on the price too.
I completely agree. Well covered. So I'm going to put a couple questions together here. The first one comes from Jay Reverb, who says, what are the attributes that give the Hedera and HashSphere combo an edge over the Canton network? Along the same lines, HBAR Mafia says, question for Rob, why didn't Hedera land the DTCC and why wasn't Hedera chosen for Swift? Two big ticket items that went elsewhere. Now, the first thing that I do want to say is I covered this in my show last week, and DTCC, they do have Canton Network as one of the networks that is going to support their tokenization projects, but they say specifically that there are going to be other private and public networks that are going to be supported as well in their tokenization. And I think that Hedera is still in a great place to participate in what I think is a perfect use case for Hedera. Now, if I was Mance and Lehman, I would be down at the Texas Stock Exchange talking to them about it, because if you do have an exchange like the Texas Stock Exchange that wants to have Hedera, the DTCC, who uses the exchanges as customers, they're going to listen to that kind of thing. And with them so close, I think it would make an awful lot of sense. But Rob, I'm going to kick this one over to you now.
Yeah. So Canton hasn't come out of nowhere, right? It's leapt, into the coin market cap in the same range as HBAR. So it's probably kind of appeared from nowhere for a lot of people who haven't understood the background. But Canton and Digital Assets, which is previously called Digital Asset Holdings, have been around for more than 10 years. They've been working very closely with stock exchanges and securities exchanges around the world for all that time. They've been building out a private network. So the Australian Stock Exchange is one of the first. For those who've been around as long as I have, couldn't have failed to have seen the news 10 years ago. Blythe Masters came out with all of these big claims. The Australian Stock Exchange, Accenture was investing in it. It was a big deal. Many of those things didn't come to pass, especially with the Australian Stock Exchange, but the learnings over the years of working with all of these regulated financial institutions brought them to the point at which last year the Canton Network was launched as a public network. Architecture is very, very different to the layer one that is Hedera. It's got privacy first. In terms of its principles, it's effectively a network of networks. It's solely focused on regulated financial institutions. And it has a very, very different sort of tokenomics model that may or may not prove to be successful. So from a tokenomics perspective, the Canton coin has unlimited supply. It has this kind of dynamic of mint and burn. So you kind of get rewarded for usage, and then the transaction fees that are paid with that coin are burned. So there's this kind of really interesting dynamic of mint and burn, but unlimited supply. So potential for massive inflation, but constrained by this other dynamic. Very difficult to understand how that would play out within a kind of secondary market and crypto speculation mode. And I suspect we're seeing that at the moment because from a crypto interest perspective, the price of the Canton coin is going up and down within a range, and that might be this might be the reason. I don't know. I've not looked into it closely enough. The HBAR, to compare the two, is a fixed supply with very predictable release schedule, very transparent release schedule, far more familiar to markets. And actually, in terms of the supply having been allocated to particular parts of the ecosystem, is significantly kind of distributed as well. So 84, 85%, whatever it is at the moment. So there's a very different dynamic. And I think we look at coin market cap and other kind of metrics for this, and we're not comparing like with like. I think it is fair to say that we would all have loved to for Hedera to have been announced by DTCC as one of the networks. Like you say, it's not ruled out at all. I think it's understandable why Canton, as a kind of network of networks and privacy first type regulated financial institution infrastructure, would partner with DTCC. But I think there are lots of opportunities for the networks that plug into this backbone could be Hedera based, absolutely. 100%, or even Hiro based, right? They could be separate private networks. So I think architecturally that all works as well. The side note around Swift is that Swift haven't actually selected any network. I think it's going to take many years for Swift to actually move to a distributed ledger-based system. Their announcement at Cybos last year, where I was at with the Hedera team, gave little away. They're experimenting with consensus, and consensus, of course, are an Ethereum-based shop, but that's only really prototyping. So prototyping with an EVM network. We continue, or AP Plus continue to, I keep saying we, there's lots of we's where I'm concerned, but
the ecosystem, Hedera ecosystem.
The ecosystem, the Hedera ecosystem and AP Plus, continue to work very closely with Swift. So, there are many angles here as well. So none of these things should be ruled out. One thing that is for sure, no one believes in a single network anymore. So interoperability between the networks, horses for courses, very use cases that specialize within specialist networks that are best in class for those use cases will naturally develop. And I think that CIOs and CTOs and lead engineers and architects, it will behove them to actually look deeper when they do their technology selections, their network selections. So all of these announcements we've seen over the last couple of years of proof of concept with particular technologies are all for nothing when it comes to production grade, especially regulated, but also operational and strategic enterprise solutions. CIOs have to look at their vendor selection, their technology selection processes need to go through the risk team. They need to go through the strategy team. They need to be signed off by the executive team. All of these things means that they won't just blithely select their technology that they've got the most tokens in. It will actually have to be done in the full harsh light of a methodical technology selection process, as with all enterprise. And so, that objectively, the networks that are best in class for those use cases will come to the fore, especially when we've got this kind of fabric of interoperability. And, as we've often said, Hedera is supremely well placed for all of those things, especially with the governance model, which is unique, and the pricing model for transaction fees, which is unique. So all of these things kind of contribute to our very well placed positioning. And announcements like the DTCC and Swift, really are not knocking us off course at all.
So getting a little bit more, I know you did a little bit of research into Canton, getting a little bit more into the edges that Hedera and HashSphere has. What about things like fair ordering, and which seems like it would be absolutely critical for something like, an exchange for these tokenized assets that are going to eventually make it on an exchange. Another thing that you mentioned the other week was the fact that I'm not sure that Canton is set up to facilitate stablecoins like Hedera. Of course, you have the Kenyan Digital Exchange, and they have to have a stablecoin that represents the Kenyan shilling. In your dive into Canton, how are those as far as edges that we might have, and are there any others?
We definitely have edges. I'm not sure specifically. I've not seen any kind of tokenization type use cases beyond real world asset tokens, right? So RWAs are the the core, the bread and butter of Canton, and its architecture is this kind of network of networks. I suspect stablecoins would be the flip side of that, and I'm sure with a little bit of AI and searching, I could find out whether that question could be answered better, or maybe I'll come back next time and look at it. I haven't seen anything yet that suggests that would be a core strength. But then, we've seen other networks that have like Tron, like Paxos, that have done a real pivot and really doubled down on stablecoins as one of their core strengths. So stablecoins are just tokens, that are backed in a particular way with an on-ramp and off-ramp, a redemption path. So I think, that if it made sense for Canton to do that, then they probably would. In the same way as it makes sense Hedera to do it, then we have done. And it's very easy to launch stablecoins technologically on Hedera, as we've shown time and time and time again. Technologically, like I said earlier, these networks are very different. I think you mentioned the fair ordering aspect. Yes, absolutely. I mean, we're not a blockchain, obviously. The resistance we have to MEV and to other ways of front running within these networks are very, very attractive to marketplaces. But Canton can have a private mode as well, and so it's not necessarily a big deal in kind of private networks that there's potential for front running, because there's different architectural mechanisms for preventing against that, especially when you've got a privacy first, fully KYC'd and KYB'd network. That's those things tend not to happen because it's very transparent when they do. We still have asynchronous Byzantine fault tolerance, which I think is a superpower of Hedera. We are a fully public network, which again, and governed by the Hedera Council. So those are unique aspects which attract a far broader spectrum of enterprises than just the regulated financial institutions that Canton's focused on. But I guess time will tell. There'll be battlefronts, as there are between every network, and then there'll be alliances formed where it makes sense to do that. And I truly foresee that there could be some alliances forming with Canton that would work very well for Hedera.
So another thing, you mentioned the battlefront, and Hedera has been battle tested, so to speak, because we have active DEXs, we have, the NFT marketplaces, we have lending and borrowing. You don't see that kind of stuff with Canton because they're going straight into, these large institutional use cases. Do you think that's something that they might be missing here a little bit because they're not getting battle tested like Hedera is in some of these real world retail applications?
Well, I mean, we both remember how long it took from an enterprise first focus from Hedera through to retail. And actually getting we missed 2 or 3 of the waves because of that enterprise first focus. With NFTs and DeFi and so on, and we've caught up now. I truly think that some of our retail applications are best in class. So when we then go to look at Canton, maybe they are a cycle behind us, and or maybe they don't want to. And I don't I don't know. All of this is run out of the Canton Foundation. So they've got a foundation which is that kind of normal separation between network and ecosystem growth and business development. So that's run out of Canton Foundation. I honestly don't think that they'll be focused on retail anytime soon. And that's a key differentiator as well. And as I've often said, we've got the benefit of this hybrid model of public and private. And where it makes sense to have private networks, we will do so because we've got HashSphere now. But most of the liquidity, most of the utility, and most of the usage is going to be on the public network. It's going to be driven by public stablecoins, and it's going to be, retail use cases as we kind of scale up over the next few years. And so that will drive Hedera on a path which Canton are not currently on, to my knowledge.
All right. So you mentioned Canton's foundation. We've had a shakeup in some of the orgs here recently over the past couple of weeks. And Jay Reverb has the final question here saying, would love to get Rob's take on the reasoning behind the recent organizational changes with the Hedera Foundation and Hashgraph. And I would like to hear it as well.
Oh, well, I mean, it's all in the foundation blog, right? So maybe just refer to that for those of you who haven't read it. But the TLDR on this is that this is just a natural point in the maturity of the ecosystem. Actually, a really strong signal that is the case. What has happened, and for those who've been around long enough, was that we decentralized maybe 4 years ago, and so the council and Hedera set up a foundation, or a foundation was set up and an agreement was created between the council and the foundation for ecosystem growth, business development, to be driven out of the foundation. That foundation then grew to a point over the last few years through a number of cycles and changes in leadership, etc., to the point where Hedera 2.0 was kind of proposed by Charles Atkins last year, actually just over a year ago. And that was seen as part of that natural maturation cycle as well. My perspective on that over the last year or so has been, with my UseCom chair hat on, where I was pushing Foundation very hard to invest in all the ecosystem integrations that we needed, the wallets, the bridges, the liquidity, the USDC usage and liquidity, the oracles, all of those things needed to be in place for enterprises to actually want to use Hedera, because that was necessary. And they did a great job at that. Over the last year, they've done an amazing job of that. And they'll continue to do that because there is residual continuing ecosystem in the wider Web3 space developing. So they'll continue to do that. And there's a small team now left that is focused on that. What they don't need to do anymore are give new grants, because free money is... None of the foundations are actually doing that now. Really, the grant giving phase of Web3 is now matured into venture capital and investments and kind of equity plays. So the pure play grant part of it is no longer necessary, although the foundation will continue to honor all the grants for which they have existing agreements. So again, there'll be a small team will continue to do that. And the other thing that they don't need to do is business development per se. There was that switch from the original foundation, which had all of these funds and fund leads and a grant committee, was really just business development around those core pillars of the funds. What we've seen in the last year under Hedera 2.0 is that wasn't necessary. That was kind of merged into a greater focus on things in addition to the ecosystem integrations and the support to some of those retail businesses that for which grants were given, enterprise business development and council membership recruitment and other corporate and council based focus, marketing, etc. So Hashgraph was growing that, with HashSphere, with the marketing team, with its own business development. And there was a duplication of effort across Foundation and Hashgraph. And so a decision was made strategically that it made no sense to duplicate that effort, and Hashgraph would take that on. So some of the business development personnel who are very experienced and dyed in the wool and around, some of them longer than you and I in this ecosystem, are moving to Hashgraph. So they'll continue to kind of build out the business development, the enterprise business development side from within Hashgraph. So that meant that the foundation could naturally shrink, could focus on specifics around existing grantees and ecosystem integrations with a far smaller team, and business development and some of the more enterprisey stuff that it had been doing naturally fits into what Hashgraph are doing. So, like I said, I think it's actually a really good and very strategic maturation of where these ecosystem partners are going, and demonstrates that we live in a constantly kind of review and refine mode where each of the ecosystem partners is doing the right thing for the ecosystem.
All right. Well, I'm interested to hear where some of those players end up, because I know there was a lot of really good people there at the foundation. Now, that's the last one that I have for you today, Rob. I will say that we appreciate everybody for asking the questions. If you have any additional questions, you can go ahead and drop those down in the comments. But Rob, as always, thank you so much for coming on, and we'll see you next time.
My absolute pleasure. I'll see you next week.
Okay, finally, it's time for the HBAR and crypto market. We had another roller coaster week this week. Bitcoin is down slightly on the day, but up 5% on the week to about $95,000. HBAR is pretty much flat on the day and the week, down slightly, and is sitting at about 11.7 cents at the time of recording. We were doing well earlier in the week, testing 13 cents with the initial draft around the market structure bill, but we pulled back as Coinbase and others balked. Passing the bill doesn't matter nearly as much for Bitcoin's store of value narrative as it does for HBAR, on which we plan the markets of the future to be built. So it's not surprising that the bill's opposition has an outsized impact on HBAR compared to Bitcoin. We are looking for direction, but HBAR is up about 12% on the year. So thus far, the 4-year cycle putting us in a bear market is still very much a question mark. Looking forward to next week. I'm going to get on my normal spaces. One of them is DeFi Corner Live. That's 3 p.m. Eastern on Monday. And then also on Thursday at 11 a.m. Eastern, we're going to be getting on with Kabila. Might jump on for a few more as well. And looking forward to the interviews next week. I'm going to get Impart on. We might do another Shark Bites. I have a few more pokers in the fire. We might have some more content for you next week. But that's pretty much all we have. I do want to remind everybody that I am going to go to Tokenized Puerto Rico. So if you are going to be down there, please let me know. I'd like to see whoever's down there, but that's pretty much all we have. We'll see you again soon.